All right, and good morning, folks, and welcome to the short fall. My name is Dave, and we have a kind of like nothing going on with the markets today, which translates to me into a fade here. We've seen futures go positive and then negative a couple times, so looks like kind of like nothing's going on. Big news with the well, it depends who you are, I guess, with the Supreme Court vote yesterday upholding the travel ban. So a lot of people talking about that. Earnings coming up. VIX currently down 28 cents with front month futures 15.80 and second month 16. We did go right back into contango yesterday, which is great. And, look for, in the absence of anything happening, once again, more air coming out of the balloon here and us just kind of fading back downwards. That was a spike, folks, and that was the thing that longs are looking to play and shorts are looking to avoid. And there's many ways you can play that spike. You could have been positioned ahead of time to capture the spike by being long something. You could jump onto the short side on the way down. If you're sort of a perma short type trader, then you just took pain during that spike. But if you held onto your position, things are going to come back for you. Number of ways to play it, and tradable stuff going on with other stocks all day yesterday. Action occurring. This is one of these days where we were down before, and so if you look at investing.com, they had some articles on why we're down, and then all of a sudden we're not down, so it's kind of moot. Let's take a look at the Drudge Report, and we see Mitt Romney, and it says Romney reboot. Millennial rocks Dem Party. A 28-year-old Democratic Socialist just ousted a powerful 10-term congressman in New York. And let's see. Socialist is a funny word because it causes panic in the minds of some people, and in others, it is just a word that describes things like our police system is is a socialist concept in that you're redistributing the tax dollars to benefit everybody. Social Security could be seen as a socialist concept, but it's used by other people as like this fear inducing word, like we're going to become socialists. It's going to be like the revolution in Russia or something. Anyway, let me get back to the stock market because I don't want to upset anybody. We have, in the term structure, gone back, as I said, into backwardation, and there's your shot of it. 1.2%, I'm sorry, I said backwardation, I meant contango. 1.2% contango right now, which isn't a whole lot, but it still means that things are decaying. Plus, I would imagine from that big up move, we will get some, we did get some beta slippage, so you're going to see a lower UVXY soon, and it's going to be way lower. That's just the way things work. I was interested in a Stevie Vicks quote from yesterday on Twitter. Now, I haven't talked about Stevie Vicks in a little while. He is a great guy who was gracious enough to come on the show last year, and very intelligent gentleman, like many of the people I work with on my side job from Bulgaria, which is a cool thing to be. And but he had a quote yesterday where he said, you know, the average for the year now, if you take in like the spike and the big backwardation we were in during the spike, and you average all the days together of backwardation and contango. You know, we had a huge spike, we were in huge backwardation for a teeny bit, and then we were like negative for a while, and then we were positive. So if you take that all into account, we've been net flat drift, or flat anything that would pull down the ETPs, basically. I mean, you're never flat like beta slippage, but we've basically been flat when it comes to contango backwardation if you average all the days together. And that means that people who've been employing strategies to take contango and monetize it have not made money. And because we've been net flat the year. Now, basically what it was is people lost money on that big spike and haven't made it all back yet. But still, a interesting point yesterday. And I'm trying to locate it here. Okay, so here's one that's sort of like that. It says 2018 averages, VIX contango over the year, 1.7%. Roll yield, which is what I always talk about, which is the difference between spot and M1 future, 1.35%, both lowest since 2008, normally averaging north of 5%. No systemic carry yield in the VIX futures this year. This year you are trading the VIX, not collecting carry yield. So very insightful and poignant point from our Mr. Stevie Vicks. Otherwise known as Stephen Aniston. So keep that in mind. If you've been using a strategy that helped you collect money by taking advantage of contango, guess what? If you've been using it all year, you haven't made money, and this is why. Because contango yield has been contango's been the lowest since 2008, and the spread between spot and M1 has been the lowest since 2008. So if you're a short vol person and you haven't been making money, you're not alone, and this is why right here. So thanks to Stevie Vicks. Thank you for great insights and talking about you on my show live now. What's up, James? How you doing, buddy? I can see your comments back there. Thanks for joining us today. And that all being said, you know, if you did miss the spike, then, which I certainly didn't miss a spike, you know, you have been making money since then, sort of, and it looks like you're going to make money today, and, you know, probably things are going to get better this year. They certainly have since that February situation. And here I can graphically illustrate how things have gotten better this year since then. If we go to this VIX Central here, and you pull up the contango tab, okay, and you focus in on the end here, 2018, and I'm going to try to pull this and see if this will work right for me. So if you take that section right there, okay, so this is going to show you the light blue line. Let's see if this shows. Let me just check my viewer here and see if this is showing right. I'm kind of slightly in the way here, but let me move myself a little bit. All right, so this to the right of me here, this blue line that's like right by my left ear there, this I'm illustrating here with a pointer, the red line there is basically positive or negative effects of contango or backwardation or drag. And you can see the blue line way negative here. That's February spike, okay? And then you can see it staying negative through like March, April. It's negative here, except for a little section right there. And then you see it go back positive here. And so after May, we're basically all in the positive, and you've got decay due to contango. Once again, the light blue being the relationship between M1 and M2, which is what we care about because that's the relationship that affects VIX ETPs, and you see it being positive. And if we go back other years, you see it positive all the time almost, except for a teeny blip. And so that all this negative stuff here is no to reverse effects of drag on these ETPs. So that's why nobody was making money for being short this stuff for all that time period, and that's why you saw SVXY and VMIN just sit there. And if we actually go to UVXY, the UVXY chart, you're going to see that reflected in this chart as well. So let's go to the 1 year chart, and you see me in the way again. All right. You see, obviously here's February spike, and then stuff kind of, you're the same. You're at 20 3 months later, and then we finally started to get the decay to kick in down here. And then you see this spike that we got this week right here again. So not smooth sailing like it was in 2017 by any means, and just goes to show the free money that we were getting for a while. Free money is never free. Trading's tough, and a tough game here. Now I'm like halfway out of the picture now. Let me move myself over here once again. And let's go to barchart.com for a second and take a look. And markets take a reprieve, and that's a good way of putting it from Nick, because nothing really happened all that much yesterday, and the vol definitely came in pretty big. We kind of had to turn around the term structure yesterday, so you didn't see as much of a down move in these things as you saw in the VIX, but still the damage being repaired in the term structure yesterday in a big way, and that will continue today if things go on like they are with sort of the market's not really moving. So we had a bunch of numbers out earlier today, and we still have pending home sales at 10, crude oil inventories at 10:30, and FOMC member Quarles speaking at 11 a.m. this morning. Let's see what the bias is coming out of Nick today. Yesterday, we gave the markets a neutral bias, as futures and instruments we track had no sense of direction, hence the neutral bias. The Dow did advance by 30 points, and other indices gained ground as well. Today, we aren't dealing with a correlated market, and our bias is to the downside. So he's betting down today. Could this change? Of course. Remember, anything can happen in a volatile market. Now, that was at 4 a.m., and since then, futures have really recovered somewhat. And let's see. Then at 4:20 in the morning, U.S. dollar was down a little. Crude was up a little. 30-year bonds were up a little, and E-minis were down 68 ticks. Now, E-minis up $1.25, Dow futures up 20, and NASDAQ up 6 and change. And we're getting close to the open. And so I am going to let you get on with your trading day. I do very much appreciate you checking in with me this morning and the Short Vol Show. And I will talk to you next time on the show, which will be tomorrow morning. Thanks for watching.